Hello, everyone, and welcome to our show today. So today we're talking about business loans. We're going to be talking about a lot of different kind of business loans that you can get, even if you have challenged personal credit, even if you have really bad personal credit. We're still going to talk about how you can get money for your business. Now, for those of you that don't know me, my name is Ty Crandall. I'm actually the CEO here at Credit Suite, and this is exactly what we do at Credit Suite. At Credit Suite, we work with every legitimate funding program, over 1,000 lenders. So this way we can help our clients get the most money at the best terms. And working with all these legitimate funding sources, and one of the only companies out there that works with all the legitimate funding programs, that gives us the ability to come here, talk to you about all these different programs that are out there that a lot of business owners just don't even know are available, and help them make available for you. So if you're interested in getting approved for funding, we never charge you a dime of money to get approved for funding. Lenders will charge you, of course, fees. We negotiate to get those as good as or as low as possible as well. You can go to creditsuite.com/get funding. And at creditsuite.com/get funding, you can fill out a handful of questions and apply for all funding in one place. So let's dive in. So turning to business credit to get the money to build your business is one smart business decision if you're looking to get money for your business. Alternative funding sources can also help. Look, by alternative, I mean alternative to conventional banks. So the big banks, the Bank of America, the Chase, the Wells Fargo of the world, these are conventional banks. And a lot of people think they can't qualify there. You're probably right. It's very difficult to qualify there. But what happens is there's all these alternative funding sources that also work to help you get money, even when you can't get money at the big banks. So we're going to be diving in and talking about some of those today as well. But again, you might be tempted to try these conventional lenders and big banks. There's nothing wrong with that. Just know that those are much harder programs to qualify for than what we're going to be talking about today, because credit unions, commercial lenders, like banks, mostly will not loan you money unless your credit's impeccable and you've been in business for a long time. As a matter of fact, if you want to get an SBA loan, if you want to get a loan at the big banks, one of the things you need to do is make sure your credit's pristine across the board, which means you need to have good business credit and good personal credit and money in the bank so you have good bank credit scores. Okay, why? Well, because they don't know neither you nor your business. And that makes them feel that you're a really bad risk if they don't have this information. So remember, the conventional banks, they're looking at both. They're looking at your personal and your business credit. Both become very important. Now, if you see things from their perspective, they're typically being cautious because they don't have enough information to lend you money, which is why they ask for all this different information that they'll ask for. Now, the SBA can't help most of the time either. Look, SBA does not actually loan money. Instead, what they do is set loan guidelines. Okay, so if you're a company that wants to get an SBA loan, you don't go get a loan from SBA. You're getting a loan from Chase or Bank of America that's offering an SBA loan because SBA sets the guidelines and guarantees those loans. So if you default on that loan, for example, well, then SBA pays 90% of what you default on. So it lowers the risk of these conventional banks, okay? But again, if your company's new or your industry is felt to be high risk or your personal credit's bad or your business credit's not established, you're just not going to get approved with these type of loans either, okay? So what I like to say is this. Here's the easiest way to break down funding in less than a minute. In order to get approved for some kind of financing, you need a strength, a lendable strength. It's usually either credit, collateral, or cash flow. And we're going to talk about business credit, some options that'll work if you don't have credit, collateral, or cash flow. But if you're going to SBA, they need all three. They need good credit, they need revenues that are consistent, and they need to see tax returns to show profits increasing, and they also need to see collateral. If you don't have all three, these big banks just aren't going to work. It's just a waste of your money to even try to go to them. They're not the best source for capital. And let's be honest, delays are going to cost you money. If you have to wait until a bank or credit union would feel comfortable, well, then you could be waiting for many years because you can't even get in the door with SBA unless you've been in business for 3 years or longer, okay? And you'd be missing a lot of opportunities if you did wait. So we don't want that to happen. So let's talk a little bit about some of the other options that will work for you. Now, per the U.S. Department of Revenue, most business loans and credit lines that are available today do not come from these big banks. Okay, they are coming from these optional lenders, these alternative lenders that provide these programs that you're not going to find at the big banks. And with the big banks, bad credit's a problem, but there's a way to get around it with these alternative lending programs because bad credit is not going to be a driving factor in denial for some other programs that don't look at credit as a strength. Remember, as I mentioned, credit, collateral, cash flow. I call this the 3 C's. credit, cash flow, collateral. That's what's looked at to get a loan. So if you have credit issues, well, then the solution is pretty simple. You just need to not look at lenders that are credit-based. If you're looking at lenders that are looking at the other assets, such as collateral or cash flow, or looking at some of these funding options like business credit that don't even need any of them, well, then that's really the solution to the problem, okay? Now, again, good business credit's an asset along the way because business credit itself opens up $10,000, $20,000, $30,000 individual credit cards, regardless of personal credit. What else business credit helps you do is it helps you establish a good business credit profile and score, which oftentimes will help compensate for a damaged personal credit score, right? So if cash flow, credit, and collateral are the three strengths lenders want to see, some of them want to see all three, some only want to see one, well, then if you have damaged personal credit, it can ruin your ability to get some kind of financing. But when you have really good business credit, it offsets some of that damaged personal credit and makes it easier for you to then get approved, okay? So business credit's a really big asset. Your business and personal credit scores aren't the same either. They can often diverge significantly. As a matter of fact, the nice thing about this is business credit scores are based only on how you pay your bills. So if everything that's reporting to them is showed as paid as agreed, you'd have perfect scores. You'd have excellent scores. If you paid everything early, your score would be 190 or 100. Okay, even if you only paid on time, you'd have good scores. So because of it, it's much easier to get good business credit scores than consumer credit scores. If you have bad consumer credit, it can be any number of different factors because credit scores are made up of payment history and utilization and credit mix, whereas business credit has none of this, okay? Good business credit's not developed by chance, though. That's the problem. So overnight or without you making any effort. But we know how you can build business credit. We'll be talking about this today where it's not linked to your social security number. And we'll also be talking about a lot of other options that will work for you as well. So let's dive into one of the first of them, cash flow financing. So one of these options that probably works best for people that have credit issues is called cash flow financing. Now, it's one of the more popular types of business financing today. I will say this is the #1 most popular kind of funding product that you will see advertised on Facebook and anywhere else that you're seeing funding advertised. And it's because that money is very fast and easy to get. Matter of fact, it's easier and faster to get funding from this kind of program than it is any other kind of financing that's in the business space. And this doesn't even look at personal credit in a lot of cases. All that's needed for approval is a 6-month bank statement review. Sometimes lenders only do 3-month bank statement review. Some sources that we'll talk about today don't even need bank statements. They do an electronic review of your bank statements instead. Now, you'll typically get approved for about 10 to 12% of your annual revenue. And you need to have about 120,000 or more in annual revenue to qualify. Now, if you have as little as 60, you still may qualify. There's still some lenders that may be able to help still give you an approval. So 12% of $200,000, for example, if that was your revenue, would be about $24,000. So you're able to get about 12% of your annual revenue. Okay, so again, here's an example: $600,000 in annual revenue, $60,000 loan, while $400,000 in annual revenue would be a $40,000 loan. So, and there's no collateral requirements here as well. And a lot of lenders lend as low as a 500 FICO score. There are other lenders that don't even look at personal credit at all, even loans and credit lines that are available with absolute no credit score requirements at all. Okay, so this is really fast, easy money with no credit score requirements. So how do you get approved? Well, often you need to be in business for at least 1 year. You should have revenue of over 10 grand a month. Here are the 2 basic requirements for this program. Now, you can overcome either of these, but probably not both. So in lending, we call this compensating factors, which means if you have a rule like you need to be in business 1 year or more, and you only been in business 9 months, there's a way to get past that and break that rule if you have other strengths that compensate for the weakness of not meeting the 12-month requirement. So if you have been in business 6 months, 8 months, 9 months, 10 months, there's still hope. It's just there's limited sources that will do that. Well, everybody will basically do it with 1 year in business or more. Not everybody, but most lenders in that space. And the same with revenue. If you don't have $10,000 a month in revenue, you have 5, 6, 7, 8, 9, $10,000 a month in revenue, then those options can work for you as well if you have some other kind of strength that can overcome the fact that you don't have the $10,000 a month in revenue. Now, you're going to have about 10 or deposits or more into your bank account. So by this, sometimes it fluctuates. We work with lenders that only need 6 deposits in a month. But what they're trying to avoid is like real estate agents. Real estate agents have 2 or 1 or 3 big transactions in a month, the big deposits. and then that's it. They want to see regular ongoing or deposits into your bank account, basically like a retail store. If you operate a retail store, you're making money every day. Every day money is going into that bank account. They're looking for consistent deposits. Okay, you also need to show a positive bank balance at the end of the month. But the number one thing any lender cares about is whether or not you will pay them back. So they're always trying to see if you have enough money to pay them back. If your bank statements at the end of every month show a negative balance or you have a bunch of non-sufficient funds, well, then you're going to get denied because you don't even have enough money to pay your current bills, let alone take on a new loan. So this is why they're always looking at a positive ending bank balance. Because again, if you have that, then you're typically, if you have positive cash at the end of each month, then you have enough money to pay back a loan. Now, once you pay back about half of that loan, you're then going to typically get offered another loan. Okay, and terms will get longer and the rates will get better. So let's talk about payments. Look, stop getting obsessed with interest rates. The majority of what affects your payment is term, how long the loan is, not the interest rate that you pay. Okay, interest is 100% tax deductible. You get all that back on your taxes. What you need to care about more than anything else is getting the longest term loan you'll get. And here's the reason I say that, because with this kind of financing, you'll get options. When we get you approved, for example, you have 3, 4, 5 options to choose from. Those options will charge you a higher interest rate for a longer term, and you'll have options to get shorter terms and pay lower interest rates. So every time we see this, 95% of the time, our clients choose a longer term and a higher rate because that gives them a lower payment. So longer term really helps equate to a lower payment than it does interest. And interest is just based on risk. So there's a lot of things like being in business longer and fixing your personal credit and all kinds of things that can help improve the rate. But you're mostly focused on getting the longer term. That's what matters. Now, over 70% of fundings that we see come back and get more money because it's so super simple. Once you get in the door with this kind of loan, they do not want you to ever leave them. Meaning that once you pay back about half of what you owe, so let's say you get a loan for 25 grand, you pay back 12. What's going to happen is they're going to come back to you the minute that 50% is paid back, and they're going to say, you want more money? You want more money? Let's give you more money. Then all they're going to need is one bank statement review. You send one bank statement, they review it, and boom, money's in your bank account in 24 to 48 hours. I mean, we help clients get payroll the next day using that because they already proved themselves. They already paid back half the loan. Then they're able to quickly come back and get even more money with the lender. So again, as I mentioned, what happens here is two things. After you prove yourself with the first loan, they give you a second loan and they make the loan term longer. So you came in to get 25 grand, you paid down 12, now you own 13, right? Then you come back and you get another 20. So now you're up to 33 grand, but your payments are probably the same, maybe even a lower than the original $25,000 loan you took out. Why? Because the second loan has a longer term. The second loan they give you gives a lower interest rate. So this gives you the ability on the second, the third, and the fourth funding. The more time you come back for funding, your term's getting a little bit better. Your interest rates are getting lower. So what it means is it means that you're able to come back and get funding again and again and again, and your payments still stay pretty reasonable because they keep lengthening the term and lowering your rates. Okay, so that's why cash flow financing works so well. Now, business revenue, which is cash flow financing, cash advances. So one place to turn with this kind of financing is also to look at cash advances. Now, we mentioned revenue lending. We mentioned where you're actually able to come in and use revenue to qualify. But here's the thing. With the financing that we just talked about, they're looking at deposits into your bank account. So what they're doing is they're looking at all deposits. They're looking at checks. They're looking at cash. They're looking at actual transactions from credit cards. They're looking at everything. Now, these merchant cash advances are just looking at your credit card deposits. Now, remember, with neither one of these aren't loans. Basically, all you're really doing is selling your future revenue to them at a discount. So it's based on the intention that you're going to have future revenue. So the way that this financing works is that what they say is lenders come into the space and said, okay, look, we find that businesses that have consistent deposits, the revenue is increasing month to month. They can see a growth in the business. There's money left over at the end of each month. These people, if money is deducted directly from their bank account to pay the bill, these people are very reliable at payments. As a matter of fact, this kind of financing, even though there's really no consumer credit score requirements with most lenders, actually has a 95% pay-through rate. So very low risk to lenders to lend this, okay? But what they're really doing isn't giving you a loan. What they're doing is they're basically just selling your future revenue. They're looking at what they can expect to see in future revenue based on your past, and then they're able to fund you. And again, the funding is pretty quick on this, within about 72 hours. So some other things I want to say about revenue lending. PayPal and Square, make sure you're set up with both of them. Make sure you run part of your transactions through both of them. The reason is even though this kind of financing, you can get 30% or you can get 12% of your annual revenue, with PayPal and Square, they'll give you 30% of your revenue that you run through them. So if you're running part of your transactions every month through PayPal or Square, then they're very easy to get loans with. Sometimes only charge like $500, no credit check. They go up to $150,000 in loans in some cases, and they'll give you 30% of your annual revenue. So if you haven't already, start using PayPal and Square for these. It's a really, really, really good way to make sure that you can get funding with this program. So 401k financing, using an existing 401k or IRA as collateral to be able to get financing. That's exactly what this is. These are IRS-proven strategies, so there's no tax penalties. You get an interest rate of about 5% or less, close in about 3 weeks or less, no consumer credit score requirements. You don't need tax returns. You don't need collateral. You don't need any of those type of things. You can get it approved for about as much as 100% of whatever's in your 401k. So, we've got a client that's a bar owner, couldn't get 25 grand in his own bank, but we use this kind of financing to get him 750,000 in financing. So 5% interest rate, credit line or loan, not based on personal credit. Maybe even if you don't have a 401k, you might have other people around you that do. Meaning that in 75% of business owners get money from family and friends. Well, it's much easier to get a 401k and tap into that, where they only lose the 401k if you don't pay back the actual debt, than it is to try to get cash from those people. Meaning it's easier for me to go to grandpa, grandma, mom, or dad and say, look, why don't you just leverage your stocks or bonds or 401k as collateral, and then you only lose out if I don't pay back the balance or the debt. That's easier to get money from them than just expecting them to hand you cash. So whether you're using your 401k or that of somebody else, very good way to get financing. So grants, the government hands out grants for all sorts of reasons, and it's like a scholarship, right? It's free money. It doesn't have to be paid back. So the government keeps a searchable database of grants at grants.gov. Heck, that helps. A whole database just full of government grants, especially for the use of business. So that's a great place to go, grants.gov. Search under keywords corresponding to your industry. Now, not every industry is going to qualify, but you won't know unless you check. So make sure you act fast to get the grants that you do see. Fill out all the applications as thoroughly as possible, and don't lose time with incomplete applications, because then they just come back to you and then you have to get the information to them in time. Okay, USDA, USDA.gov. Okay, so they have some great grants and loans depending on if you're in a rural area. Okay, now they don't just lend money or give money to grants, ranchers, and farmers. Okay, energy companies, waste management, housing preservation. So USDA is a great source to go to for grants. Okay, HUD, okay, the Housing and Urban Development also hands out grants. So if your business isn't related to housing or city development, you're probably not going to get approved. But you can go to portal.hud.gov. So then that gives you access there. If you're not in a rural area, then this might be something that you want to consider as well. Also, don't forget state or local government grants as well. Offer a partnership to your state, city, town, local government support for a project. I mean, look, there's a lot of local ways you can get money. So there's a lot of cities, counties, towns that give you financial incentives to open up or run businesses in certain areas, because those areas, they need to stimulate growth. So the best way to stimulate growth is to motivate business owners to own businesses there, because if business owners own businesses there, then they bring jobs, and where there are jobs, people need homes to live, and it brings that area up. So you got to look at that too. Most states, most counties, most towns have databases of grants you can look for. What I love about grants is this isn't something people do. It's just not. Like I literally just connected yesterday. The guy accepted my friend's request. The guy with the question marks all over his jacket, I love that. Like the grant money guy, he's still out there doing all kinds of crazy stuff. So that's the same thing. There's all this money that most people don't even know about. And that's exactly what grants do for you. It taps into free money you don't have to be paid back that a lot of people aren't applying for. You're not competing with a lot of people. So another possibility is a microloan, which you can get which you can't get even from a regular lender. Instead, you can get these from a micro lender. Now, you can try the Association of Enterprise Opportunity to find a local micro lender. That's microenterpriseworks.org. For some reason, sometimes they hit that URL. It doesn't work. Sometimes it does. So write down the Association of Enterprise Opportunity as well as microenterpriseworks.org. These are microloans, and this is another great option for you. It's just what it sounds like. It's not a lot of money, but they're typically loans up to about 35 grand. Now, SBA has a microloans program too, directly from them, even though they don't typically lend money. They do have a microloan program, and the average microloan through them is about 10 grand. So microloans are not a lot of money, but when we survey our clients, we find the startups are looking for about 10 grand. So microloans, depending on the stage that you're in the business, could work for you very well, especially if you're just getting the business off the ground. Now, business credit cards have to be paid off promptly, right? Just like personal credit cards, but you can apply using your social security number and date of birth, but for identification purposes only if you're really building business credit. So remember, there's this whole level of business credit building that you could do as well. And this is where you're getting credit cards for your EIN, not linked to your social. So you're building your business credibly. You're going out and getting some credit with vendors that report to the business credit reporting agencies. Okay, those vendors establish an initial business credit profile and score. And then you use that established profile and score to start getting these kind of credit cards without the social security number being linked to the application. Now, some lenders now are talking about social security numbers or asking for social security numbers and date of birth. Okay, only for verification purposes. But this kind of credit you can get without a guarantee and without a credit check as well. And I'm not sure how much time we may dive into building business credit, but it's a great way to go because actually it's the best way to go. Because business credit is one of the only ways of funding where you don't need cash flow, you don't need credit, you don't need collateral, anybody qualifies. If you have a U.S. business, even if it's a nonprofit, you can still get it. And the nice thing is if you follow the steps to build business credit, you are literally able to go out and start getting $10,000 limit credit cards in about 60 days worth of time if you're following the right system to do so. Okay, so if you're not, we've got a link at creditsuite.com/YouTube. If you're watching this on YouTube, go there and check it out. We've got a free guide that maps out the steps to actually build business credit. But again, we talk about a lot of this. If you're getting our emails, we talk about the same thing. This is credit you get for your EIN, not linked to your social. No personal credit check. So personal credit quality doesn't matter. And again, you're able to get individual limit accounts of 10,000, 20,000 or higher in a very short period of time, all because business credit scores are based on how you pay your bills. So once we get some accounts that report, that opens up a lot more funding options for you. Okay, and another thing about business credit is it also is used to get you loans. So by building your business credit, you're accessing the money you need for furniture, for office supplies, for marketing, for almost everything. Because you can get business credit cards with Walmart, with Staples, with Office Depot, with Apple, with Lowe's. You can get business credit cards with Nordstrom to give you an idea how many of these type of companies offer them, all without the guarantee, all without the personal credit check, no cash flow requirements, no collateral requirements. Great for anybody that doesn't have cash flow, credit, and collateral. And by building business credit, it helps you become more lendable with other kinds of loans as well. So another funding option is crowdfunding. It's just through a place like Kickstarter or Indiegogo. This funding gathers money from a crowd, a lot of individual people instead of one big investor. The crowd likes your idea. Well, they decide to donate money to your project, even as little in some cases of $5. But you've got to have a good pitch and you got to have a good product as well. Now, crowdfunding platforms take about 5% on average of the donations as their fee. So the money usually doesn't need to be paid back in crowdfunding, but they will take 5% of the proceeds and collect it to pay for their platform. And again, a lot of these crowdfunding platforms that you need to know will not give you all the money unless you actually meet the campaign goal. So that's why you need to look for what's called flexible funding. If you're going to do crowdfunding, you really need to look at flexible funding. What that means is this: if you set a goal that your goal is to raise $10,000 and you only raise $9,500, most places like Kickstarter will not give you that $9,500. They give it all back to the people because you didn't hit your goal. So it really means that the goal you select and how much you plan on raising becomes extremely important, because if you don't hit the goal, you lose the money. But with places like Indiegogo and Flex Funding, if you were trying to raise 10 grand and only raised 8, they would still give you all of the money. So Flex Funding is the key here. Now, again, beyond that, I want to make a couple other mentions. Crowdfunding works for 2 reasons. One, you have a social network that's willing to share the project once it goes up. Once your crowdfunding campaign goes live, you need to rely on a social network to start sharing that like crazy to get all kinds of activity on that page for your campaign. And you also need to line up a bunch of donors in advance. Because for crowdfunding campaigns to really go viral, meaning that they start showing them to everybody, then what has to happen is they have to see a lot of activity, a lot of people hitting the page, meaning it's a popular campaign and a lot of people are contributing. That doesn't happen organically. You typically have to drive that to happen. And if you drive that to happen, then they see that it's a popular campaign, they start showing it to everybody. Now, we did talk about building business credit a little. So if you don't have a good enough FICO, well, then again, business credit building is probably the easiest way to get the money you're looking for. You start with what's called vendor credit. Now, not every vendor reports to the business credit reporting agency, so you've got to get credit with vendors that do, like Uline and Quill. And Granger are a few of them, for example. You need about 5 of those type of accounts to then move on to store credit, which we'll talk about. Now, you can also get trade references. So even if people do not report their credit to the business credit reporting agencies, well, they still may work really, really, really well as trade references. So make sure that even if you don't have, because this is the problem, 97% of the people that give you local credit or give you credit, they don't report the credit to the reporting agencies. So they still are very important for you to become trade references, and they still help you get other financing. So know that, but they're not helping you build your business credit. So if you have about 5 trades or reporting or more, then you can get retail credit, places like Walmart, okay, places like Amazon, places like Apple, Dell. If you have about 8 accounts or more, you can move on to fleet credit, about 8 or 10. This is where you get fuel. This is where you're getting get repairs, auto repairs, maintenance, et cetera, et cetera. Chevron, Sunoco, Conoco, all those type of places will give you fleet credit. And then you continue from there, okay? As you get more credit, then when you have about 10 accounts, or nowadays about 14 accounts, okay, then that's what gets you to the cash credit tier. And by the way, there is we'll talk about that a little bit later. So the cash credit tier is when you have about 14 accounts reporting: Visa, MasterCard, American Express. So these are credit cards that you're able to get that are accepted everywhere, right? So again, you have to have enough payment experiences, enough accounts reporting to get approved, but that really is the key. Okay, business credit building is all about getting accounts that report to your business credit reports. The more of those you have, the more types of credit become available to you. Okay, that's why doing whatever you can to add accounts to your business credit reports become extremely important, because the more accounts you have, the more of these tiers open up. When you have 10 or 14, you can get cash credit, even auto vehicle financing as well. Now, another thing that I didn't mention here that I probably should have, another kind of financing, I wanted to keep this under about 30 minutes, I'm right about on time, is also called peer-to-peer lending. So peer-to-peer lending through places like Lending Club and through Prosper are very, very, very popular. We've got some stuff on our YouTube channel and on our podcast about peer-to-peer lending. This is another option. Now, they won't work for bad credit. They're going to want to see about a 620 FICO score or more. But those kind of funding options will give you 5-year terms. Remember, I told you the longer term, the lower the payments. Those will give you 5-year terms, and you can get approved with about a 620 FICO score or more. And there's a lot of other kind of financing that can work for you as well. You could purchase equipment, borrow against equipment you already have. You could buy commercial real estate. Nowadays, we have a program where even if you don't have great credit, you can still buy the property you're in with no money down and keep your payments about the same. If you want to buy commercial vehicles, or you already have commercial vehicles, well, then those are some financing options for you as well that we really haven't had a chance to dive into. If you have account receivables where customers are paying you money on terms, you could use that as collateral to get financing. Credit doesn't matter there. If you have purchase orders you need to get filled, well, you can get purchase order financing. Credit doesn't matter there. And 2 other ways that you can get financing that I didn't really get a chance to mention are angel investing and venture capital. Those are both ways where you're giving up a percentage of ownership in the business. But the nice thing about that is that you are then able to come in and you're able to get approved. Again, even if you don't have a lot of the things that you need to get other kind of financing. So a couple other options as well. So to recap, consider funding sources that aren't even loans at all, okay? Like unsecured business financing or government grants is an option. So we talked about revenue lending, that it's really just advancing your, selling your future revenue. We talked about account receivable financing, I just mentioned. That's just using your receivables as collateral to get financing. Remember government grants, crowdfunding, 401k financing. Okay, don't forget about microloans, which we talked about. Building business credit's a must. For anybody that has consumer credit issues, it's just a must because it offsets the fact that you have consumer credit issues and gets you a lot of money really quick and also helps you become more lendable. And that's a huge asset for you as well. So something definitely to consider. And then don't forget, we talked about a lot of other options as well. Venture capital and angel investing works really well to exchange a percentage of equity for money in your business. On our YouTube channel, we have more information about both of those programs as well. And I mentioned a lot of the others. One of the ones I didn't mention is available at creditsuite.com/fundbox. This is a real cool, easy to get credit line that if you have revenue, you've been in business 6 months or more, about 3 to 6 months, let's say, or longer, you can usually get approved for a simple real credit line that you could use to fund your business. We got approved, and then we got our third approval bumped us to $100,000. There's no credit check in the beginning. They don't use financials. They just use bank account management. You don't even need to submit bank statements. That's at creditsuite.com/fundbox. We also talked about peer-to-peer lending, account receivable financing, purchase order financing, commercial vehicle financing. If you like this, if you got some ideas from this, well, then please like this video and subscribe. And then we have a whole playlist just about business financing where we dive into a lot of different kinds of funding products individually and teach you everything you need to know regarding rates, terms, etc. We break down angel investing in a separate video, venture capital, all these programs more in depth so you can get all the information on the programs that may work for you. And don't forget, it costs you no money, none, to work with us to see what we can do to help you get funding. The reason for that is because some of the loans that we work with pay us a referral fee. So that's how we get paid, and we actually get you better terms with the lender because we're doing so much volume through them that you get on your own. So it's just a nice way to access all funding in one place. You have finance officers that talk to you about all the money you can get now. Then we have what's called a graduation process. We graduate you to term loans. We graduate you to lines of credit. We graduate you to SBA loans. So our goal is to get you all the money you can get now and then work with you on implementing a strategy to get you into an SBA loan. We tell you everything that's needed to move through the tiers of loans, help you qualify. So the goal is to get you from where you are, to get you all the money you can get, then move you into the longest, lowest interest rate loans, and then get you into SBA loans where you're getting, $4,000 payments on $300,000 loans because the term is so long. So that's what we do. If you want to get in touch and find out all the money you can qualify for now, even a lot of the stuff we didn't talk about, go to creditsuite.com/get-funding. Or feel free to give us a ring at 877-600-2487, info@creditsuite.com. And at the top right of our page at creditsuite.com, find us on our social channels. We go 2 podcasts a week is typically what we release. It's the only places that you'll access some of our content. You can listen on the go. And then you'll find all of our social channels. We go live on Facebook every Wednesday at 4. We go live on YouTube Tuesday at 1. And on our Facebook Live, you can actually answer questions and ask questions and engage with me right there in real time to have all your questions answered. So a ton of information on our social channels. You can access them at the top of our website, creditsuite.com. And again, don't forget, creditsuite.com/get-funding. If you're interested to know, all the funding you can get approved for now costs you no money to find out and no money from us, no charges, even after you get your funding. So at least let us help work to get all the capital you deserve to have. If you have any questions, reach out and let us know. 877-600-2487, info@creditsuite.com. And don't forget to get approved for funding at creditsuite.com/get-funding. Bye, everybody. Have a great day.